Welcome back. In this section, we are going to talk about DeFi, which is decentralized finance. This is one of the terms that you'll hear too often whenever you're talking about blockchain, when you're talking about metaverse or Web 3.0. So let us find out what is DeFi or decentralized finance. NFT or non-fungible token is also a form of decentralized finance. So let us first define what is decentralized finance, and then we will see what is the value of DeFi and how it is related to metaverse. So these are important terminologies because if you understand everything that we are talking about in this course, trust me, these are like ABCs and a higher sentences in an English language as well. So if you understand these well, metaverse, Web 3.0, anything related technology will be easier for you to understand and relate to. And trust me, once you wear that headset or with the gear, everything that we're talking about in this course will make absolute sense to you. You will be able to visualize what the future we are talking about in this course. So let us find out what is DeFi, because this is one of the terms that is also, I would say, as a hyped word. You will hear a lot of DeFi, let us go for DeFi. Why not SeFi? SeFi is centralized finance. So we'll compare what is the difference between DeFi and what is the difference between SeFi, which is centralized finance. So let's get started with DeFi. And again, I'm telling you, NFT is also a type of DeFi, is not exactly, I would say, so all DeFis are not NFT. DeFi is a superset, NFT is a subset into it. So let's find out what is the definition of DeFi. So DeFi is decentralized finance. So in a centralized finance, the money is held by banks, as we all know that we operate currently in a I would say in a of real life in a centralized finance system where our money is being held by banks, financial companies, and those institutions. And in centralized finance, the money is held by corporations as well. And the financial system is full of third parties who facilitate money movement between parties, with each one charging fee for using their services, right? Means, for example, if you want to send money from A country to B country, there is a third party, authorized third party. Definitely they are regulated to do a foreign transaction, and even in domestic transaction they are highly regulated by the central bank and by the international banks as well. So that is the centralized finance. And definitely each party, because they are providing any service, they have cost involved, and hence everybody just mark up the price by a certain amount, or they charge a flat fee to facilitate this transaction. Decentralized finance eliminates intermediaries by allowing people, merchants, and businesses to conduct financial transactions through blockchain and other emerging technologies. So, decentralized finance actually eliminates bank. For example, let's assume one thing, and that was the biggest thing why blockchain came into the being, right? Blockchain said that, for example, if you want to transfer $100, why do we need a bank account? Why banks are charging us, right? Because they say that we secure your money. But in a blockchain, people are saying we don't need a central institution to safeguard our money. We have the trust of the entire network. And that is the distributed ledger technology of blockchain, where each node is a trusted party in different kind of setup. So again, in blockchain is decentralized. Well, blockchain is also permission and non-permission. So again, if you understand that well, you know what I'm talking about. So that is one of the reasons. So decentralized finance eliminates those parties and say, we do not need a bank. We do not need an intermediary. If I have to transfer $10 to someone, I don't need a bank in between. I can do that directly through technology, right? So let us trust the technology and the network rather than a central powers like banks or these intermediaries. What they are doing is that they are just moving money using technology as well, right? But they are charging money because then there is a setup, there's a legal cost, there's a human resource, and all those things. Blockchain says, let us remove these intermediaries and let us kind of do a transaction based on blockchain and this decentralized finance. Through peer-to-peer financial networks that use security protocols, connectivity, software and hardware advancements. Actually, these, when I say peer-to-peer, is P2P payments. For example, you want to pay money to me, I want to pay to you. We do not need a bank. There are protocols, security protocols, there's a blockchain protocol, there is a connectivity, which internet definitely required. The software, the application in which we do this transaction, like digital wallet, we talked about into the metaverse where you can buy a land. that is also an application or a software application. And then hardware advancement. When I say hardware, it is about the edge computing that we're talking about, the headgears we're talking about, and those kind of hardwares, like where data can be saved, can be stored. So again, in a distributed ledger technology in blockchain, the data is not stored at a central place. It is stored at each and every node who is allowed to participate in that network. If it is a permissioned blockchain, and if it is a non-permissioned blockchain, which means that anyone who is a party to that network will have a copy of the transaction, which means we are not trusting one institution, we are trusting the entire network. Because in that setup, what also happens, for example, if someone wants to change something in one, I would say, node or one of the setup, it is not possible. Because what happens, in order to make any change in blockchain, you need to have at least 51% of that network on your side to make that transaction, right? And in order to do that rectification, or in order to do that modification into the transaction, you need to do the 51% change exactly at the same point in time, which is impossible, right? Which is so hence blockchain is considered more secure. So I'm already giving you some aspect of the blockchain, but if you understand it really well, you know what I'm talking about. And the applications on the blockchain is called dApps, or decentralized application, because these are applications based on blockchain. Blockchain is a decentralized technology, and hence the application that uses the blockchain network is called dApps, or decentralized applications. So applications called dApps are used to handle transactions and run the blockchain, and it uses cryptocurrency for transaction, and it runs on smart contracts. So again, what is a smart contract? Smart contract is just, I would say, an automatically executed contract. So currently it happens in Ethereum. You remember I spoke about that Ethereum also allows smart contract. So smart contract, let me give an example. For example, let's say I live in your house and you have rented it to me. And we have a contract that, okay, what you do is that on the 5th of each month, you pay me, say, $50 as the rent of this house. I said, perfectly fine. We have an agreement. In a physical, what happens is that that agreement happens on a piece of paper. In smart contract, what happens, the entire contract between us gets executed in code, which is called smart contract. Now what happens? Let us understand the use case of it. So in that smart contract, it is built that, okay, this person will pay me $50 by this 5th of every month. And if it doesn't happen, automatically deduct money from his amount or his wallet and give it to me. That's one case, if we have agreed to it. Or second, just lock the gate, or could be many other things, right? That or levy an interest of 10% per day, or 5% per day, or 2% per day. Now what happens in this case, the owner, in this case you, do not have to do anything. You do not have to remind me, you do not have to call me, you do not have to call the lawyers, you do not have to call the police, you don't have to do anything. The smart contract will automatically get executed on that day. So if the system recognizes that I have not paid on 6th by 6th, then what happens, it automatically executes all the related agreement. It could deduct the money into my say the escrow account or my account automatically, or it can start levying the interest. So the moment, for example, let's say I decide, oh, I forgot I have to pay money on to my landlord, and I decided to pay on 10th, which means if I had to pay $50, then obviously on the 10th of that month, I will have to pay more money, which means there's a smart contract which gets executed automatically because we have an agreed code for that. So again, smart contract is nothing but a coding of a contract. So in a very layman term, that's how it works, and that works on blockchain network, primarily on Ethereum, which can give you cryptocurrency, which can give you NFTs, which can give you a smart contract as well. So hence Ethereum is a multi-use platform. Not sure about whether it is secured or it is highly secure than others, but yeah, that's how these are just the use cases of, I would say, Ethereum. So peer-to-peer financial transactions are one of the core premise behind DeFi, or decentralized finance. Remember, we talked about an example where you want to give me $10 and I have to receive it, which means that why do we need to involve a bank? You need to give me money, I will just receive and say, okay, I received it. And what I do is that I do not say that only to you that I have received the payment. I also broadcast that message across the network, and each computer on the network, or what we call in blockchain is node, will save that confirmation, which means that if I deny at later point in time that I have not received the payment, you can verify from any other network that yes, you have made a payment to me and I have confirmed that I have received. So that is also one of the beauty of blockchain. So peer-to-peer financial transactions are one of the core premise behind DeFi. It tries to reduce transaction times and increases access to financial services as well. Another point, the decentralized finance ecosystems, open and distributed nature might also pose problems to existing financial regulation. Currently, decentralized finance or DeFi is unregulated. What does this mean? Which means, let's say we are on network, we decide to do a transaction on blockchain, but for example, if there's a dispute, I just kind of say that I have not received the $10, do whatever you want to do, let us go to the court. Now, what happens? Since it is not a regulated currency or a regulated transaction, in a physical setup, no lawyer, no judge, and no regulation will be able to help you out. It is currently based on trust, which means the moment your country or our countries start regulating it and start recognizing that as a, I would say, a normal digital transaction, which can be disputed, which can be fought for, that's when the beauty of this decentralization will come in or will get regulated. But again, both have a different pros and cons. So that is the reason that it is unregulated currently as we are making this course. Maybe regulated in some part of the world, but not everyone, right? Because it challenges the existing regulation, it challenges the existing, I would say, banking system. And I'm sure that none of the institution, financial institution will be happy that any transaction is happening outside their ecosystem and they are not able to earn money, right? So hence, everybody is opposing it, the entire ecosystem is opposing. Definitely, it is also not secured. So if you lose money, no, there is no one that can help you or support you from the outside to fight that case and get that money. Again, unless you are staying in a country where this is regulated and recognized by the government. So Bitcoin in many ways was the first DeFi application or decentralized financial application. So Bitcoin, you all know, right? We everyone bought Bitcoin, still buying actually. It's now very much costly, but there were few people who rode on the bus too early and then they have minted a lot of money by Bitcoin. So Bitcoin was the first DeFi application. People used to buy Bitcoin. They used to purchase things from the Bitcoin. They used to send money across globe with the Bitcoin. So those kind of things also happened. And then there was a case of dark web as well, in which people trade in Bitcoin. I'm not going to talk about it. You can do a Google, what is dark web, how people are using cryptocurrencies or Bitcoins and all those kind of currencies, not only Bitcoin, but all other kind of currencies. So you can do a Google, you can do a research. So as a crux, decentralized finance gives you a lot of benefits, but it is not regulated. So again, it is up to you. It is the network that takes care of that transaction. I'm sure that the entire ecosystem is trying to make it secured by themselves. They are creating certain restrictions that if you do certain fraud, if you do these kind of things, you may not be allowed to participate into further transaction, or could be anything else, or there could be some physical thing which can be mortgaged or can be kept as a security, or some say currency that you have to keep as a security, or kind of a stable coin where you have, for example, let's say if you have 10 USD in your account, then you get 10 cryptocurrency. So if you kind of default on 10 cryptocurrency, then your 10 USD which you have deposited will be taken away by the platform. So again, different kind of things people are trying, but again, it is not regulated, so no one will be able to support you outside in the legal setup if anything goes wrong, and if you're not in a country which recognizes blockchain as a legal transaction, as a legal tender to purchase anything or to do a money transfer. So that's all in this chapter. See you in the next chapter. We'll talk in detail about decentralized finance and centralized finance. This was an overview. Let us go to the next chapter. See you there. Thank you. Welcome back. In this section, we are going to talk about the difference between decentralized finance and traditional finance as we experience now. Let's see a tabular comparison between decentralized finance and traditional finance as we see now, and let's find out what is the difference between these two type of finance. So in decentralized finance, you hold your money, which means you hold your money in your wallet, on your DApp, onto the entire blockchain network. In a traditional finance, your money is held by companies like banks or any corporation. In decentralized finance, you control where your money goes and how it is spent. So you can look at, you have the complete control where the money is going, where the money is coming from. Nobody can manipulate. In traditional finance, you have to trust companies not to mismanage your money, like lend to risky borrowers, which means that, for example, you keep your deposit with your banks, right? But then you only have control on the interest that you earn or the money that you pay to the bank, but you have absolutely no control where your deposit is being lent, right? Because bank, what they do is that they take deposits and then lend money to any risky borrowers or to any, I would say, prudent borrower as well, which can turn out risky. But here, everything is under your control. You decide what to do, and there is no central institution deciding about your money. Transfer of fund happens within minutes, whether it is global or international or domestic. In traditional finance, payments can take due to days due to manual process. But again, in most of the countries, I would say the domestic transaction happens in a real time or with some kind of a lag. International transactions, yes, it takes 3 days, 4 days, 5 days, depending on the regulation and the kind of and the country that you are in and where you are trying to transfer the money to. But yeah, international, yes. Domestic, mostly no, right? So that is the difference between DeFi and traditional finance. Transaction activity is pseudonymous, which means that in DeFi, the transaction that you do can be anonymous as well, which means that with only a limited information, you can do a transaction. In traditional finance, the financial activity is tightly coupled with your identity, which means that unless you do a KYC, you cannot do a transaction in traditional finance. In a non-traditional finance like DeFi, with little bit of information, you can do transaction. But again, depends on the country and the regulation. For example, in India, you need to have a lot of KYC to be done currently in order to do a transaction on any of the cryptocurrency or wallet. You'd need to have your identities registered with the institution. So they have that information. In case of any other country, again, as I told you, it's about the currency, it's about the regulation, it's about the countries. I would say acceptance to the digital or to the decentralized finance. So hence, this might change. Again, DeFi is open to anyone because there is a lesser KYC norms in some part of the world. So even if you have a lesser KYC, for example, for those people who do not have an identity document, when I say KYC, it is know your customer document, which means whenever you go to a bank, whatever documents that you submit to open a bank account, those identity documents are called KYC or know your customer documents. So many people still do not have a formal identity in many of the countries, and hence they are financially excluded. So even those people can have currency, they can have digital currency. For example, let's say if there is someone who is very poor and does not have a land, does not have a, I would say, proper identity in a country, they will be financially excluded, right? The most they can transact is in a cash form, right? They do certain manual work, they get paid into cash, they spend in cash, that's it. They cannot have other kind of things because they do not have an identity. So no bank or formal institution will engage with them to do a transaction, right? Because obviously there is a regulation on anti-money laundering, those kind of things also happen. So in decentralized finance, that is not an issue even if you have a lesser to no KYC, again, depending on which country you are in. I'm just reiterating this again and again because the regulation for decentralized finance or blockchain is not the same across the globe. Some countries are very much excited about it, have accepted it, have a regulation around it. Some countries are actually not recognizing it and trying to ban this as well. So again, different countries, different perspective. Uh, Again, you must apply to use financial services in traditional finance, which means you need to have a bank account, you need to have your documentation done, you need to have your verification done. Then only you can open a bank account. And then in DeFi, markets are always open 24/7. You can do a transaction, you can take money, you can give money. But in a traditional finance, market closes because of employees and breaks. So employees are on break, employees are not working, so many of the banks or markets will be closed. But in a cryptocurrency, it is open 24/7 because it is automated. You do not need a manual employee sitting there and kind of doing all the transaction checks and everything. Everything happens automatically. So hence, DeFi or decentralized finance is always open. Traditional finance has time because of manual processes involved. Last point, decentralized finance is built on transparency. Anyone can look at a product's data and inspect how the system works. So in decentralized finance, you have a complete transparency of how a cryptocurrency or a currency is going up and down, and there is no, I would say, governance. There is no central bank which is involved in deciding those currency. It is completely dependent on market price, which has its benefit, which has its cons as well. So again, we are not discussing that, but this is how it works, right? And in a traditional finance, financial institutions are closed books. You cannot ask to see their loan history, a record of their managed assets, and so on. So in most of the cases, even for example, if there's some loss into the bank account, you can't just check their balance sheet, right? Unless it's a publicly listed company and there's a mandate, you can't just go on every day and say, okay, tell me how you have spent my money, right? Whom you have taken given loan to, what is the rate of interest, and all documents. You can't check those things. But in DeFi, there is a possibility that anyone can inspect any kind of a transaction which is happening there. Obviously, you need to have a security. It is not so open that you can get into anybody's bank cryptocurrency account and you can take out money and you can start doing anything, right? Otherwise, then it's not a money that is owned by you. Then it's a public good where the money is owned by everyone else, right? So there's a protocol, but then it is open as compared to traditional finance. So these are a few differences between DeFi and traditional finance as we know. I'm sure there are many other differences as well, but these are the primary ones which will help you to differentiate between what decentralized finance is, what are the promises it gives, what is the traditional finance, and what are the current challenges because of which people are moving to decentralized finance. Right. So this tabular comparison will give you the exact picture what it is as of now. So that's all in this chapter. See you in the next chapter. Till the time, take care and see you there. Thank you. Welcome back. In this section, we are going to talk about 5 layers of DeFi or decentralized finance. So let us find out what are those 5 layers, which are the pillars of decentralized finance. So the first layer is called the settlement layer. So the settlement layer is the foundational layer of the blockchain and its specific native asset. For example, Ethereum is the network on the blockchain and Ether is the native currency on that blockchain. This layer provides security and a set of rules to follow, which means let us take an example of Decentraland that we were talking about where you can buy a property, right? So there, Decentraland is the ecosystem and Mana is the currency. Similarly, in the Sandbox platform, Sand is the currency, the Sandbox is the platform. So hence here in this example, it says that the settlement layer is the foundational or the basic layer of the blockchain and its specific native asset. Native asset means the currency associated with that settlement, right? So again, as in case of Ethereum, which is an example taken here, Ethereum is the network on the blockchain and Ether, which is a currency, cryptocurrency of Ethereum, as Bitcoin and then Mana and then Sand is the cryptocurrency. Similarly, Ether is the cryptocurrency for the Ethereum network. The next layer is the asset layer. So the asset layer refers to all the tokens and digital assets that are native to the particular blockchain. It is called the currency of that decentralized finance. So in other words, the asset layer is that whatever asset which is linked with that platform on which the transaction is happening. Again, we will go back to the same example as you have just understood about Decentraland and the Axie. For example, let us say the Axie Infinity is the layer, right, in which AXS is the currency associated with, right, or it's a token or the digital asset related to it. So hence, Mana is for Decentraland, Ether is for Ethereum, and then I would say AXS is for the Axie, Sand is for the sandbox. So these are the asset layer. Next layer is the protocol layer. So the protocol layer sets the protocols or guidelines for smart contracts. You remember I gave you an example where it is your house and I'm staying there with and giving you rent of $50. So which means that the protocol means the smart contract, right? And we know that most of the smart contracts are executed on Ethereum currently, right? However, there are other platforms as well in which you can execute, but Ethereum is mostly used for smart contract. So what is a protocol? Protocol means the standard regulation. So for example, you have given me a house for $50 per month rent. So our protocol is that I will pay you $50 by the 5th of each month. So that is a protocol, right? So which means that anytime that protocol gets violated, I will be either penalized or the money will automatically get deducted from my wallet if that is a protocol or that is understanding that we have developed before writing that smart contract, right? So there has to be a protocol of everything, and that is about the standardization we were talking about, that unless there is an agreed protocol, things will not work. And it happens in any of the transaction, right? For example, if you want to buy a fruit or a vegetable from a vendor, there is a protocol that you give me X amount of say fruits, and I will give you this much of money, right? Because there is an agreed price as well. You have negotiated, and that is a protocol we are talking about. So in order to buy certain things, there is a currency, there's a value, there is certain rules that you agree with, right? And that is what protocols are about. Then there is called application layer. So application layer brings the protocol to life with a user interface that is consumer facing. So again, we know the blockchain based applications are called dApps, decentralized application, right? So application is that phase which a consumer uses to do a transaction. A consumer, a layman consumer will never go and do a coding and everything, right? Even for Facebook, we know we use a mobile application or a laptop or a website. That is a user interface that we all get, right? We do certain things, we post pictures, we like, comment, and do share everything, right? But what we don't know as a consumer is that there are n number of things happen the moment you click on like. There are n number of things happen at the back end. There are a lot of codes, there are a lot of storage, there are a lot of data computation. Everything is happening, but we are not aware about it, right? What we see is a user interface at our mobile phone or at our website or at our desktop. That is an application layer we are talking about here. So that's an application layer. Then there's an aggregation layer. So the aggregation layer consists of aggregators that connect various dApps or decentralized applications and protocols which make up the foundation for borrowing, lending, or any other financial services. So the aggregator layer is like something, for example, there's a company which, let's say, is an application which deals in digital payments, which deals in lending. Buy now, pay later could be any kind of a digital payment tool. And by the way, we also have a course on buy now, pay later. So if you have not done that and if you want to know about buy now, pay later, you can do that course as well. So the aggregation layer is the layer where different services gets aggregated, and definitely as we are talking about decentralized finance, we will stick to the financial service like insurance, digital payment, lending, money transfer. Those kind of aggregation happens. So that is called an aggregation layer. For example, let's say there are multiple dApps or decentralized applications working, but there has to be a tool or there has to be a platform on which these dApps will get hosted. Let us take a very simple example. For example, you download Facebook application, right? You download it from where? Google Play Store or from Apple Play Store or any other service that you're using. So if we have to draw a parallel, the application layer means the application which is, let's say, Facebook mobile application. And if you're using an Android mobile device, the I would say the Google Play Store is your aggregation layer, right? Because it is aggregating multiple application there, and within that application of Facebook, there are multiple other aggregators like advertisers, financiers, financial service provider, data agency, marketing agencies. So there are a lot of things there. So these are 5 layers of decentralized finance, which makes it easier to settle money, It defines a currency in which the settlement will happen, means the giving and taking of the currency or the products and services will happen. Then there's a protocol layer or smart contract in which we agree that on what term I will give you this service and at what term you will return my money or give me a value against this money. Then there's an application layer which defines that in order to execute a smart contract or to use my asset or to settle the money, I need a user interface or a mobile application where I can type in something. You also confirm that I have received the payment. That is called user interface. And then the last one is that whatever application that we have created, we need to host somewhere so that the customer is able to search or is able to discover that service or application, right? We took an example of Google Play Store, which could be an example of the aggregation layer. Facebook application could be an example of the application layer. So these are 5 layers on which decentralized finance works. Hope you got it all right and you have understood everything. If not, I would request you to rewind, listen to each and every word. You will be able to understand absolutely clearly what is settlement layer, what is the asset layer, what is the protocol layer, what is an application layer, and what is an aggregation layer. And I'm sure the examples that I've given you, that too from your normal life, because that is my philosophy, that is our philosophy, that we want to simplify things, we want to connect the complex things to your day-to-day life so that you understand it very easily. And if you are able to understand that from your day-to-day life, you can create multiple other definitions and use cases from that as well. So hence we by choice don't use any high-tech word or anything jargons which can make you wow, make you feel wow, that wow, these things I have learned. But once you try to apply that, you will not be able to apply because you just got wowed with the jargon, you could not understand the concept. So our focus, our purpose, and our motive is to simplify fintech and technology for everyone, even if you are a non-tech professional. So and that's what we get, I would say, motivated, and that's how we get pleasure in simplifying things for people who want to learn and want to grow in your career or just want to learn something new. So that's what we do. So thank you so much. See you in the next chapter. Till the time, take care and see you there. Thank you. Welcome back. In this section, we are going to talk about both sides of decentralized finance or DeFi. We have heard some good thing about DeFi. We have heard something bad about DeFi. So let us find out in detail, or I would say point wise, that what is the benefit of DeFi and what is the side, I would say, effect or a bad part of DeFi as well. So let us find out that in point wise manner. So DeFi definitely removes the intermediaries, but could be risky as well. Let us find out how. So DeFi eliminates the fee that banks and other financial companies charge for using their services. Like the example we took, to transfer money, to send money to someone, to purchase certain things, to take insurance, to open a bank account. There are certain fees which are being associated, which decentralized finance removes. Number two, you hold your money in a secure digital wallet instead of keeping it in a bank. We also saw that into the comparison of DeFi and the traditional finance. So we took the tabular comparison where we saw what are the benefits of DeFi and what is bad in the traditional finance. Anyone with an internet connection can use DeFi without needing approval. It means that, for example, if there is a customer which does not have a KYC document or identity document, still they can use decentralized finance or DeFi. They can do money transfer, they can take loan on that blockchain network or on that decentralized network. But in a traditional finance, if you do not have an identity proof or identity document, you will not be able to do a lot of transactions. You may not have a bank account, and even if you get a bank account, you can't do a lot with that bank account. You can't have a lot of assets in your name because you do not have a formal identity. But in DeFi solves for that as well, and hence you'll find that decentralized finance, blockchain, NFTs, these will be used by many institutions as a tool for financial inclusion as well. They are saying that even people who are poor and do not have identity document or do not have a formal financial system can use this technology and can get financially included in a not formal but a digital manner in which they can send money. So remittance is a very big market, right? In terms of transferring money. Someone is working in a different country for money and then they are sending it back to their home. And the remittance fee of that sending money, that charge is very high. But decentralized finance makes it lesser costly, and that happens within minutes or seconds. So that is one of the benefit of decentralized finance as well. And again, the next point is that you can transfer funds in seconds and minutes than days. It is true in the international payment mostly. People can lend or borrow funds from others, speculate on price movement on assets using derivatives, trade cryptocurrencies, insure against risk, and earn interest in savings like account. Which means that gradually what these DeFi companies are doing is that they are thinking, if we have to compete with the traditional finance, we have to give them services or benefits which is similar or same as a traditional finance or even more than that. And that is the only way through which we will be able to capture more customer, we'll be able to lure more customer to our ecosystem, and people will prefer us over traditional financial companies. So that is an idea of DeFi, and that's what they want to do. But let us find out why are we saying it could be risky. Number one, lack of consumer protection. As we spoke about it, that there is no regulation, right? For example, if someone has taken money from you, and even if he has confirmed I have taken money, and later on he says, okay, I have taken money, I have confessed, but I'm not going to give you back. Do whatever you feel like, right? Then you go to the police and you file a case, and they say, okay, what kind of transaction is this? We don't recognize this transaction, which means it's an illegal transaction. So we cannot protect you for the illegal transactions. So those things can also happen, and hence there is a lack of consumer protection, or there could be a genuine mistake. For example, if you're sending money to someone, the money got deducted from your bank account or from your wallet, but it has not reached to the other person, stuck somewhere into the system. Then who are you going to hold responsible for, right? Who is responsible for this transaction, stuck transaction? You can't complain to anyone. So even if you complain to a application company, they have absolutely no control on the entire network. They can't take the money back. The only thing they can do is that they can investigate and they can wait, right? These are two things they can do, but that is one of the cases that could happen. Rare of the cases, but that could happen. High volatility and risk. As I told you, that the cryptocurrencies price are based on speculation, based on emotions, based on different kind of things that happen in the market. For example, if a currency gets delisted, then you lose your money as well. So there's a high volatility. As I told you, that a currency might be of 2000 USD at the beginning of the day and could go to say 20 USD by the end of the day as well. So that is a kind of volatility I'm talking about. We have already given you the link of those cryptocurrencies. You can Google, you can go to that website, and you can see how fast these currency change, I would say, their stability. And it's almost like a stock market. The way they operate, this also operates. The only difference is the stock market operates in a particular duration. This is across the day, 24/7, never shuts down automatically. You can trade on it any time of the day. Then if you forget your credentials like password, etc., it is tough to recover. So if you have forgotten your password, it is tough to recover that password and claim that money back. You once you Google, you'll find that there are many people who have lost their key and then the secret key, and they were not able to recover their assets, and it was of millions that they had invested in that currency, but somehow they could recover, and many of them could not recover that currency as well. So that is again, as we know, there is a saying that security and convenience are indirectly proportional to each other, which means the more the security, lesser will be the convenience. When I say convenience, it will be very, I would say, easier for you to go into the system and get the money or to hack as well. But higher the security, convenience will be lesser. Which means if security is very high, people will not be able to transact or able to do certain things. But if the security is down, the convenience will be high, because you know that you can just get into, if you forget your password, you can just reset. So those kind of things. So it's a saying that security and convenience are indirectly proportional to each other. So again, be sure to understand not only the rewards, but also the risks before getting started. That is one of the disclaimer that we have been giving you, is that if you want to invest into this market, understand about the rewards, which everyone will talk about, but also understand about the risk. And hence, we also give you a quote that currently it is highly, highly, highly risky and invest money that you're prepared to lose. So that's all on this chapter. See you in the next chapter. Till the time, take care and see you there. Thank you. Welcome back. In this section, we are going to talk about use cases of decentralized finance in metaverse and how it is connected to metaverse. So let us find out. We have learned about DeFi, what is DeFi, how it is different, pros and cons of it. Let us find out how DeFi is connected to metaverse and what are different use cases. So some of the use cases of DeFi is decentralized exchange, which means, as I told you, that the exchange of cryptocurrency is open throughout the day. So this is decentralized exchange, which means nobody controls it. It is automatically based on the market demand and supply. So if someone is buying higher, the price will go up. If someone will dump, it will go down. So completely almost like a stock, but their stock has like someone as a regulator who kind of controls it, regulates it. This is non-regulated, but this is a decentralized exchange where you can exchange currencies. Then gaming and esports, you can play sports using decentralized finance. As I told you, NFT is also a kind of a decentralized finance. So you can buy avatars, you can buy skins, you can buy games using NFTs. Then margin trading, where you can have margins, you can purchase margins, you can trade for that margin. For example, you have certain margin onto cryptocurrency, you want to give it to someone at a premium price, you can do that as well. That is margin trading. Savings, you can also save money into cryptocurrency. And now there are applications which are saying, if you invest cryptocurrency with us, we will give you equal or even more, I would say, monthly interest or an yearly interest than you get in your saving account or a check-in account with your bank. So that is also one of the benefit which some of the institutions working on this dApps and DeFi is offering. Then stable coins. So what is a stable coin? So any coin, for example, we talked about say Ethereum, we talked about Mana, we talked about the Sand. These are cryptocurrencies and these depend only and only on the supply and demand of the currency. Stable coins are those coins which is backed by a fiat currency, which means, for example, let's say there is a cryptocurrency which is stable coin, let's say, which is based on US dollar. So if you only get, say, if the US dollar, say, if there's 100 USD that you deposit or that you keep into that wallet, then you get a cryptocurrency of 100, equivalent to 100 USD only. And as and when, so these currencies do not fluctuate because the price of US dollar is not fluctuating. So it is still the same. So hence it is called stable coin, which means the prices will be stable and it will not change as per the volatility into the market. So hence that is called stable coin. That is also a format of decentralized finance. So why stable coin has come? Because everybody is saying that cryptocurrency is like a betting. You just bet, you just earn, the prices are volatile. So for example, if I have purchased a product for, say, 2 Bitcoins, but the value of Bitcoin goes down, then obviously the value of my product has also gone down, which should not be the case, right? Because the currency should not define the value of my asset. So hence they said that, okay, let us have the benefit of the cryptocurrency and the stability of a fiat currency. And once you mix those things, that is called stablecoin. Then DeFi also helps in tokenization. Tokenization means storing something confidential into a token. For example, tokenization mostly used in debit card, credit card services as well, where an application wants to store your debit card or credit card. They don't actually store your debit or credit card. They store a token of it. Token is an artificial number, is a random number which gets generated so that there is no fraud that can happen even if someone knows that token. So if you have, say, a debit or credit card, if someone knows your debit credit card, there could be a chance of fraud. But if someone knows your tokenized number against that card, they will not be able to do anything, right? So that is called tokenization. And for your information, we also have a course, detailed course on tokenization and encryption in fintech, where we have talked about what is tokenization, how it works in digital payments. So if you're interested, you can do that. It will help you to understand about tokenization. So moving ahead, trading platform and tools, as we discussed, it's like an exchange and also a trading platform and the tools that you can use to trade currencies. Now let us find out few more use cases. So the first use case after this is asset management. So asset management can also be used in DeFi. For example, real estate is also an asset management. So it allows to buy, sell, transfer, stake, and earn interest on digital assets. So what are digital assets? Like NFTs, your art, your collectibles, your real estate. These could be your digital assets. Then compliance and KYT. We have talked about KYC, right, which is know your customer. So KYT is know your transaction, which means you can validate that transaction using certain parameters. So compliance can also use DeFi or decentralized finance. So it offers know your transaction that tracks transaction behavior instead of user identity. So there's a difference. In KYC, what happens that whenever there is a fraudulent transaction, the institutions track the individual who has done a fraudulent transaction or where the transaction has gone wrong, they will catch an individual. But since this DeFi, as I told you, that is pseudonymous, which means there is a little bit of anonymity into this. So hence, instead of tracking down on the individual, they try to track down on the transaction, that where transaction has gone wrong. So that is a network on the blockchain. It's not about the real life, it's about the blockchain that they go ahead and track that whether it has gone wrong. Then analytics and risk management. So refers to and analyze data for risk assessment and reduction. Then derivatives and synthetic assets. So synthetic assets is something like an artificial asset. So it allows the creation of tokenized derivative with added security. Infrastructure development, so it offers the tool to develop, integrate, and compile blockchain solutions. So infrastructure here is blockchain, not the real estate. So infrastructure is that platform which helps to support multiple activities happening on its platform. So blockchain solutions and blockchain activities happen onto certain platform, could be hardware, could be software. So that also gets helped in decentralized finance. Then we are talking about digital identity. So digital identity means something like, as I talked about, the national identity number. So for example, you have social security number, you have a national identity number, you have a passport number, you have any local government or a national government identity associated with you. Similarly, on a blockchain network, in order to identify you uniquely into the entire metaverse or in the entire blockchain, you get a unique identity which nobody else will get in that network. So hence, DeFi also helps you in digital identity. It offers a portable self-sovereign identity that is secured and private. So that is also possible that identity cannot be tracked. Similar, because there are many concerns where people say that we are being tracked, it's a surveillance state, and all those things. People talk about that using our identity, someone can track us, using our biometrics, someone can track us. But this is considered to be a bit secured as people claim, but we don't know the reality yet. Let the time pass, we'll see that which is more secured, whether this digital identity or the actual identities that we all have, and we all have been living with that identity. So that is a debate for maybe some other day. Then insurance, it provides I would say automated insurance claims, secured audits, and reduced paperwork. So in the real life, what happens that if you want to claim an insurance, there will be an inspector which will come, there will be a lot of paperwork that happens, you have to fill up the form. In here, what happens, you remember the concept of smart contract? So if we create a smart contract, that if these things happen to the asset, the user will actually get the money automatically from the insurance company. So if that is codified into a smart contract, and if anything happens to that asset or something that has been insured, automatically the money gets transferred to the beneficiary if all the conditions of the smart contract, which is coded in coding language, is met, the money and everything will get automatically settled. So that is also decentralized finance. Then we are talking about P2P borrowing and lending. It ensures peer-to-peer lending and borrowing with high interest rates and low risks. So here, for example, if we can send money from one person to other person, that is called peer-to-peer. I can also borrow money from someone and can say, okay, and we can do a smart contract, okay, that I have taken money from you by this date of every month or every week, I will pay you this much money, and if it doesn't happen, automatically an interest will be levied onto me, a penalty will be levied, and it will be added to the next time of payment. So those things are also possible. So on P2P we can have saving, deposit, money, identity, lending, everything there, right? Then payment solutions. So it offers faster, safer, and more transparent solutions compared to the legacy or the traditional payment system. As we discussed, right, that moment you make a payment, you're not sure what is happening with that payment, whether it will go or not. If it doesn't happen, then there is a regulation around it, right? But here you can do a transaction within minutes and seconds. So it is saying that it could be faster, it could be safer. But when we are talking about safety, we also know that currently, since it is not regulated in many of the countries, so hence if the money gets stuck, you are on your own or on the platform. They will definitely fight for you, because if they are not able to solve the problem, then you will never invest, and you will also talk to many other people as well that don't invest in cryptocurrency. You will lose out your money and everything else. So hence it is also their responsibility to safeguard your interest for their own interest of the business. And the last one is decentralized organization. So decentralized administrative entities that manage the core financial operations. So these organizations also called DAO, DAO, that helps to manage the entire network, because it is not possible, right? Exchanges has to be managed by someone. Definitely there is a network, there is a software, there is a system which works, but it has to be managed, right? The servers needs to be managed by someone, and those entities are called decentralized organizations, which manage the entire network onto that ecosystem of decentralized finance, or DeFi as we call it. So within this metaverse, you will see all these things happening. It will also offer you, for example, let's say if there's a bank into the metaverse, you can also open a bank account there, which means you need a KYC documents or KYT documents. Then you need an asset management. For example, if you want to save money, or if you want to keep your money safe into some institution in a metaverse, you can keep that into a virtual bank as well. You never know. Maybe a physical bank may also open a digital branch there, and you can deposit money there as well. So again, it is limited to our imagination. So asset management can happen, compliance will happen, then infrastructure development can happen, digital identity can be managed, insurance you can also get there, and then you can also get a P2P lending or a payment solution. As you get into the legacy system, you can get that into the metaverse or a digital ecosystem as well. And there could be an institutions which will manage the entire network, as we have uh, as I'm sure that if you are working in this industry or any industry, you know there are some administrative institution which manage the entire ecosystem, the IT network, the logistics and everything, manage the entire network, backend systems, logistics, network, and everything else. So that's all in this chapter, where you have understood about what is DeFi and how it is related to metaverse, what are the use cases, and how DeFi will be used in metaverse, and how it will be useful for you if you decide to enter into this universe which is beyond the real world. So thank you so much. See you in the next chapter. Till the time, take care and see you there. Thank you. Welcome back. In this section, we are going to talk about what more can be done with DeFi. We have understood about different use cases. Let us find out the ever-growing list of DeFi and what are more possibilities which can happen through DeFi. So again, as I have told you, it's an ever-growing list. So through DeFi, you can send money around the globe. We know you can send money around the globe. Okay, I have mentioned 2 times, so probably sending money twice could be uh, here. So I'm really sorry for that. But then, yeah. And then moving on is access stable currencies. You know about stable coin, which has the benefit of a cryptocurrency but stability of a fiat currency. So that is called stable coin. Then borrow funds with collateral. So when I say collateral, it could be a digital collateral. For example, if you have a land which we have purchased in Metaverse, you can actually keep that as a mortgage. You can take loan against that digital land or any asset as well. Then borrow without collateral. So you can borrow with collateral, you can borrow without collateral as well. For example, without collateral, you could have, say, earned some reputation into the market, and everybody knows, okay, here is a person who has a good digital asset, right? And hence you will get a loan from an individual or an institution. And then you can start crypto savings as well. And then you can trade tokens. You can grow your portfolio. When I say portfolio, means you can have saving, you can have insurance, you can have real estate, you can have NFTs, you can have art, you can have collectibles, you can have multiple financial services that you can buy there. Then you can fund your ideas as well. I'm sure that with if you know about IPOs, which are called initial public offerings, whenever any share just want to launch into or get in the market, they launch this IPO. Similar to that, there is something called ICO, or initial coin offering. So if there's a new idea which you want to publish on blockchain, then you can also start your own coin. When I say coin, it's just like Mana or Bitcoin or Ethereum. So those kind of coins you can also launch, and those coins are related to a project. For example, let's say I start a project that I want to build say a chair company into Metaverse. Now, if that is excited, because everybody says, okay, I don't know if we ever need a chair into Metaverse because a digital avatar, so they will never, I would say, kind of feel fatigued, or they will ever feel tired that they need to sit on a chair. So that could be a bad project. But someone says, okay, I think chair could be a good thing, because if you're going, say, if you're going with your family, and I'm sure that you want to cherish that moment, you want to stand somewhere, you want to sit somewhere, and you just want to mimic what you do in your real life. So maybe that is a good project. So I say, okay, if you want to invest into this idea, you have to buy this token, and you have to then pay me money, obviously. So what happens, for example, I say that, okay, my coin name is chair coin. So what you do is that, similar, you have Dogecoin, you have Mana, you have Sand. So I start a new one which is called chair coin. So if you have to invest, or if you have to take some share of this idea of this company that I have floated, so here also what I have to do is that I have to write a paper onto my idea, and I have to publish that on the network, so that it has the entire business plan, that what this company will do. Something that happens in the stock market as well, right? You have to file a paper which everybody reads, and then they go through it, and then they invest into the business. Similarly, I do the same thing for the chair idea. Someone finds it, okay, this sounds great. So what they do is that they buy chair coin. And how do they buy chair coin? They buy chair coin by investing their real money into it. And what I do is that I get fund, and then I start a digital business, or even a physical business can also be done, provided it is regulated and legal in the country. So I get funds, I give them currency. So instead of giving them shares, I'm giving them currencies equal to the amount that they have invested in, which again they can sell to anyone, they can keep it, so that once, for example, if this chair business grows, they make profit, your value of your currency goes up. So hence you'll find that there are multiple coins or currencies which are being introduced on a daily basis. So if you go on a trading platform, you'll find so many currencies which are getting created, and overnight they are also being closed. So again, as we talked about the platform, the reputation is very much important. So even if you're investing, please go through or do a proper research before doing anything of that sort. So again, let us come to the chair coin. So you've decided, okay, I think this is a great idea. Let you invest in chair coin. So you buy certain chair coin. I got fund. I start my business. It does well. You get your money. You, even if you do not invest, your value of that currency grows. So for example, if you have given me $10 against one chair coin, so for example, the business goes up, the value of that chair coin is more than $10, $20, $20,000. And once it goes $20,000, you can sell that coin to at $20,000, and then you invested $20, but you got $20,000 maybe. So that is one of the case. Second case could be that business has flopped, and even your $20 has come to the $2, and you decide, okay, let us exit at $2 before this company gets delisted from this exchange. Hence, through this system, you can also fund your real life projects as well, and also a virtual metaverse based uh, ideas as well. So if you do a Google, or if you do an internet search on ICO, or initial coin offering, you will understand what I'm talking about. But then that is also possible. For example, let's say in a metaverse, I'm sure there will be multiple things, and there will be people who will be ready to invest into different projects. So I say, okay, in this metaverse, I see I have a land, I want to buy, or I want to build a discotheque there, I want to build a bar there. So everybody says, okay, this makes sense. I think there is no bar, there is no discotheque, there is nothing there where people can go and enjoy. So I think this is a great idea. Let me give you this much money into it. And you get it. You pitch your ideas there in a virtual world. You get money through ICOs or through your your coin, and then you earn money. So that is also a way in which you can fund your ideas. Then you can buy insurance, as we know. Then you can manage your portfolio as well. Portfolios mean your currencies, your business, your identities, your wealth, your insurance, your real estate, everything that you have in your financial portfolio, you can manage there. So this is an ever growing list. It will grow on and on and on and on, and there could be multiple use cases that can be done, because DeFi is the finance, I would say, system which will be used in the metaverse in Web 3.0. So hence, this is the future if you are bullish, or if you have understood the importance of metaverse. So that was about this ever growing list. I would request you to now sit, close your eyes, and think about different use cases which can happen through decentralized finance, DeFi, NFTs, and in metaverse. So that's all in this chapter. See you in the next chapter. Till the time, take care and see you there. Thank you.